I tested Casper SMC's the first candle rule strategy.
The first candle rule is by far the easiest way to become profitable fast.
Across 7 years of market data, and I'll show you a simple data-driven adjustment that increase profits by 3 times. Most trading strategies are judged by opinions. Professionals judge them by data. That's what my channel is about. First, I'll react to Casper's explanation of the strategy. Then, I'll show you how much money it actually makes when it's put through a professional-grade quantitative backtest, and how one small rule change dramatically improves performance. No hype, no guessing, just what actually matters to professionals. Data, data, data.
To start off your trading day, you want to get to your desk right at 9:30 a.m. Eastern Standard Time. And we're going to wait until the 9:30 to 9:45 a.m. 15-minute candle closes.
Okay, use first 15-minute candle.
And then you want to mark out the high and the low of this first 15-minute candle.
Mark high and low.
And in order to confirm the market's direction, we need to go to the 5-minute chart.
Okay, go on 5-minute.
And we're going to wait for a displacement break.
Wait for a displacement break
of either the high or the low. What we're looking for is called a fair value gap.
Wait for fair value gap to form.
We're actually good to put a limit order right on that fair value gap.
Enter on start of fair value gap.
And we're going to put our stop loss on fair value gap candle 1.
Stop loss at fair value gap candle 1.
And for our target, we're just going to go for a fixed 2-to-1 risk to reward.
Take profit at 2 risk to reward. Here are performance stats over the last 7 years for this strategy. It made 1,363 trades. Win rate was 36.8%, which means it's profitable. Break-even would be 33.3%. Sharp ratio is 0.64. Calma ratio is 2.85, which is okay, but could be better. Profit factor 1.11. It had 7 maximum consecutive wins and 14 maximum consecutive losses. In the last 7 years, trading one contract, it made just above $73,000. Let's take a look at equity curve. In 2020, this strategy lost a bit of money, but from that point on, in the last 2 or 3 years, it works much better than it did before. So the strategy is profitable. The real question is it capital efficient? This is where institutional thinking diverges from retail thinking. Most retail traders focus on win rate. It feels safer. But professionals care about risk adjustment returns. What matters to me is the Calma ratio. How much profit a strategy produces relative to its maximum drawdown. There are many ways to improve this strategy. At a professional level, you'd add predictive features that can be even seen in a chart. And yes, it can get very complex. But you don't need any of that. Here's one simple adjustment. The New York Open is consistently the most volatile period of the trading day. Higher volatility means large range expansions. We will increase the risk to reward ratio from 2R to 3R. So take profit at 3R, made the same amount of trades, win rate dropped, which is normal, to 31.5%, Sharp ratio improved to 1.08, Calma ratio also improved to 3.34, profit factor also improved to 1.21, it has 5 consecutive maximum wins. Maximum consecutive losses it got it's 17. Maximum drawdown worsened to almost $44,000, but overall this strategy made $150,000, over 2 times the profit of the 2R. In the earlier years, it performed about the same as 2R, but in recent years, there's a big difference if you're having take profit at 3R than 2R. Let's take a look what I'm talking about. 3 risk to reward here in green line. 3 risk to reward, it's outperforming 2R at almost every possible point. In the last year, especially, it's outperforming it a lot. In the last 3 years alone, the 2R made $53,000, where 3R in green made over $113,000. And if we take a look at last 12 months, the 2R made $17,000, while 3R made $59,000. That's more than 3 times more profit in the last year. That's quite substantial. Let me be clear, I'm not here to sell unrealistic dreams or claim this has some insane win rate. I've seen strategies far stronger than this. But that's not the point. For a beginner, this is structured, disciplined, and realistic, which already puts it on top of YouTube strategies. It can be a real stepping stone to consistency, or passing a first prop challenge. And that's the value here. You're welcome.